So let's talk more about this issue with my colleague and friend and sparring partner, Shaheen Contractor of Bloomberg Intelligence, who covers ESG. So look, I get it. The whole political backlash is part of it. I also think performance is underrated here. Energy had a huge rally, and a lot of ESG funds are light on energy, and they underperformed. And I think that was a bigger problem for the sort of ESG ETFs, which have seen outflows or at least been flat over the past 18 months.
So Eric, you're right. ESG ETFs in the U.S. have seen outflows. We're at about $3 billion in outflows in the U.S., which is in stark contrast to the last year. What I would say, though, is that, we do have challenges, but 50% of the outflows was from one fund, right? And I know you've heard this before, but to me, that's not some consensus mass outflow. It's very much just concentration risk coming out.
Yeah, but the one fund you mentioned is BlackRock's.
Yes.
And BlackRock was pro ESG. They were the cheerleader for all this. Yes. They put the money in ESGU and they took it out. They must have been very much under pressure. So I might almost argue that's even worse, that it was a BlackRock ETF and their own money.
So I think I'd agree with what you say, in which, the inflows that came in were BlackRock and they were concentrated. So the inflows as well were a bit, questionable.
That's fair.
But I mean, people think of it as like this mass uprising out of ESG, but it's one fund.
It's one fund. Well, we showed how U.S. ESG is a smaller slice of the global pie overall. How have European ESG ETFs fared? To what extent do they face similar pressures like you were talking about, political backlash or concentration risks?
Not much at all. I think Europe is really where it's at. I mean, if you take the U.S. at a negative $3 billion number, Europe is a positive north of $30 billion. And it's in stark contrast to what we're seeing in the U.S.
Yeah, okay. Everybody brings up Europe in this conversation,
Yes.
but A, the government pretty much forces you in ESG, and B, you don't have any juggernaut innovative companies over there like you do with Tesla and Amazon. You can't afford to miss those companies here. In Europe, they're all going to kind of go up a little bit. Isn't that a bit of important difference here, both of those things?
So both regions, when it comes to ESG, has underperformed, right? Europe and the U.S. So Europe has still seen positive flows while the U.S. hasn't. So I wouldn't say that underperformance, doesn't matter in Europe. Though I would agree with you, Eric, I've talked about negative flows, but positive flows, we aren't seeing them. So I would call it a pause.
Okay, that's the polite way of putting it. There's a lot of criticism, Shaheen, that ESG on its own is just too big, too broad, and should be split up into E, into S, and into G. And perhaps the most obvious way is to just focus on climate in particular. How many products do you see coming to support that idea?
We're definitely seeing more of, I call them the thematics, like climate or gender funds. And in part, that's because ESG has become a little saturated, right? We've seen a number of ESG funds, and asset managers are looking to differentiate themselves. So we're definitely seeing a move towards the thematics.
Yeah, and maybe that gets less angst from everyone else. Shaheen Contractor, thank you so much. Shaheen Contractor of Bloomberg Intelligence. Now,